Today, we're going to discuss 3 mistakes I see homeowners make when looking to refinance their homes. Purely for educational purposes, my hope is to educate you so that you become more astute making such a major financial decision about your house. I'm going to talk about a question to avoid asking, true break-even for refinancing your home, and a mistake that might cost you $7,000 if you make this. Along the way, drop questions that you may have, comments about what I'm saying. We'll get back to you. First up, the famous question, what's your rate? When you're looking for a comparison on lenders, you got to be mindful of when you do this. If you talk to lender A on Tuesday and you talk to lender B on Thursday or the following Monday, because refinancing isn't as much of a priority as buying a house, you got to be careful about what's happening in the markets. I have a chart here. And all you need to understand there is that you see those greens and reds. The market moves. It's mortgage-backed securities, and they trade daily. If you talk to one lender one day and another the other day, you may not even be getting apples to apples of what might be the best lender for you. So keep this in mind and make sure to have conversations with them that are succinct in time and compare those figures close in proximity to time with them. What's your first focus? Is it rate? Is it total closing costs? Is it monthly payment? It may yield differences in then the other items associated with refinancing. You're not likely going to get the lowest rate and the lowest closing cost because it is financial markets after all. So keep this in mind when asking what's your rate. Along the way, if you like what we got going on here, make sure to check out another video here. This is about Denver home prices. Are they crashing? Number 2, the good old-fashioned break-even. Too often, I actually see clients miss 2 very important components when asking me and talking through what the break-even is. On the surface level, a lot of people will look at total closing costs and the savings, divide the number out, and that's the number of months. In fact, I think some talking heads have even talked about this for refinancing. But I think there's 2 important pieces that are being missed when talking about break-evens. If you refinance at the end of a month, the first of the following month, you're not going to have a mortgage payment, guys. It's going to stay in your checking account. If it stays in your checking account, can we agree that that's cash created? Because otherwise it would have been sent to your existing mortgage payment. So what is that number? We're going to show some math here about this. And also your escrow account for property taxes and insurance. Once your current loan is paid off, that balance is refunded to you about 30 days after closing. Those 2 things are important because follow me here. As I post this, you can see this example here. Closing costs are just under $11,000. And you would say, Ray, gosh, you're going to be saving a lot of money to spend $11,000 on a refinance. Break that apart. You see $8,200 on closing costs, $27 and change. Prepaid interest, prepaid insurance, property tax for escrow setup. Say in this example that the original loan is at 7.75% and the payment $5,214. If the current escrow balance in the account today is $2,750, if the new loan would be $664,000, total payment $4,556. So you'd say that payment savings is $658. So break even, almost 11 grand, savings 658. What's my break even? But you missed the 2 components. From those closing costs, take out that skipped payment, take out that escrow refund, and the net costs are just under 3 grand. Now, if you take the savings over that period of time, the break even suddenly is 4.54 months. This is very important because could you not bring your skipped payment to closing and not add it to the payoff? Could you also lend yourself the escrow refund from your savings if you have it and get the check in the mail 30 days down the road and replenish your savings account? Yes, then your net costs are under 3 grand in this example. So break evens, don't forget to include skipped payment and escrow refund. And third, the lowest rate is the best rate. Why is this important? Because that's all we see from credit card offers to auto loans when cars are put on TV, this financing offer, the stuff you get in the mortgage world, in your inbox, in your phones, voicemails, text. It's all about rate. That's the society that we're living in. But you got to look at it from a cash on cash comparison. I'm going to use this assumption here for what we're posting right here. $653,000 loan on a $727,000 home. That's 10% equity on the refinance. What you want to think about is if the lowest rate is the best rate, you'd see here 5.875, and the highest rate on there is 6.125. And you say, clearly, Ray, I want the 5.875. However, keep in mind that 5.875, you're paying what's known as a discount point. If the loan amount is $653,000, that's $6,530, 1% of the loan amount in fee to buy down that rate in this example from 6.125 to 5.875. Okay. Where's that money coming from? Instead of a $653,000 loan, now my loan needs to be over $659,000 because I got to finance the discount point on a refinance. Now my payment just went up and it's not as low because I just financed $6,000 more dollars. But what is the gain on the discount buy down? Once you finance in that additional closing cost, you have a higher loan amount. Therefore, $66 less per month for that 5.875 versus the 6.125 in this example. 98 months that fee will take to make up at $66 lower payment between now and then. If rates are coming down, doesn't make sense to pay points on a loan that you could refinance again if rates come down further. Something to think about then is, where are we at in the rate cycle when you're refinancing? Because if rates are going up, different conversation. I hope that helps you out. Make sure to check out another video about the true cost of a $675,000 house in Denver with a 1% rate drop here in the near-term future. I hope that helps you out. If you have further questions, drop them in the comments below. Make sure to check out other videos that we have and like and subscribe to our channel if you want to be educated on building wealth through real estate. Thanks so much.